Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Friday, February 17th. I wanted to mention for those of you going to New York for the Traders Expo, I will be speaking at the expo on Monday at 1:30. So if you have some time, do come by and say hi. Let's talk about what's going on in the stock market. We had a few things going that the market liked. One was some positive economic news in the United States. Second was a little bit more comfort about the Greece situation of coming up to a deal. But as I mentioned in the advanced video, this is only the first phase, but we are looking for some follow through in this market and to the upside, not in a dramatic way for today's action. Feel the same way about these currencies. If you look at the euro, it did trade back through this red line, which I consider a sell level. The difference between the green line, which I consider a buy level, those differences, is 235 ticks. Now, I'm not suggesting, as you know, that anyone should do this trade, nor that you would get that type of return. But I do have some questions about what does it mean when I give these numbers out, these numbers of ticks. Every market has a different value for ticks. And just to give you a quick summary of what happens here. In a currency, a futures currency, it trades in 0.0001 increments. So the next value above 128 even would be 1.2801. That one tick of incremental change has a value of $12.50 for this particular contract. All you have to do, take 235 ticks, which is the value, the difference between these numbers, times $12.50, and you would get $2,937.50. So that's the dollar value of this change. And again, I'm not suggesting that you should do that. Now, something else I want to point out to you, though, is that this market did trade lower, which would initiate a short position, and that position would fail because it reached a risk parameter that we would have for that size of the trade. Now, let's take a look at these other currencies. If you look at the yen, we're seeing continued weakness here, which I'm not looking for a big move down in Friday's action, today's action, but continued downward pressure. We don't see any evidence that buyers are coming back into that market. And the rest of these currencies, we're looking for buyers to continue. We see that the notes and the bonds did back off. Again, that's not surprising because of the action that we talked about in the stock market. So that's behaving normally. If we look at metals, we can see that gold firmed up a tad bit. And we're at a level we found buyers before. If you look at silver, the same situation. But I want to point out something here in silver too. Now, silver also traded below one tick below that red line, which means it would close out a long position if you and I were long from this level. And again, I'm not suggesting that anyone should do that. But it's meant to give you an idea of how someone would think about these markets. Well, first, the sell level, if we did that sell, it failed. It would have not made money, it would have lost money. On the buy side, the difference here between that green line and the red line there is $4.95. Now, a way that you could think of when it comes to silver, the tick value there is 0.005. So it trades in half-cent increments, and that has a value of $25. Or you can think of it as every penny of change is $50. So if you take 495 cents, $4.95, 495 cents times 50, you get $24,750 is the dollar value of the incremental change between this red line and the green line. So that's the magnitude of change there. Again, I'm only giving that as a reference, not suggesting that you should get that kind of return. But what are we looking for? We are looking for buyers to come in across the board in these metals, and we're looking for it today. Now, in the energy market, it gets dragged along. Crude oil, it's in rarefied atmosphere. If you think about the fundamentals behind this, this situation that we talked about earlier is creating some of this upward pressure, but I don't think it's not going to be sustainable. But what drives a market is the beliefs that people have that come to the market. Natural gas, we're looking for a sideways market, and in these grains, well, we're looking for buyers to return and give us a push back to the upside across the board in beans, corn, and wheat. And that concludes today's market studies. Looking forward to being with you again, and in the meantime, take care.